Ain't it a great day? Ain't it a great day? Ain't it a great day? Ain't it a great
Hello
day?
everyone, my name is Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is December 4th, 2025, and altcoins are looking extremely bullish. Very, very bullish, but not just in a general sense, in a pure sense. I'm going to talk about that. I'm going to talk about what Bitcoin's doing, what I expect in the immediate short term. I'm going to talk about my time frame for when this is all happening. So if all that sounds interesting to you, then watch until the very end. Hope everyone's having a great day. Let's get into it. All right. Let's start with Bitcoin analysis on the 4 hourly time frame. All right. This is still my time frame. I'm still expecting towards mid-December for Bitcoin to reach its target of around 101, 102K. Okay? And I still believe that that the analysis that suggests that we're currently in a wave 2 counter correction is correct. Thus far, everything about that has happened according to plan. Nothing's really out of the ordinary. Every candle further confirms or supports that trade thesis. So again, remember, it was 24 days down in impulse. Okay, you just keep going down, keep going down, keep going down. Actually, wave 1, 2, 3, 4, 5, right? Extended wave 5 right there. And now you're looking for A, B, C, wave 2. Okay, so this is wave 1. Wave 2 is an ABC flat correction. And that should take you to between 0.5 and 0.618. So the golden pocket of this 24-day channel, or this 24-day impulse. And the whole time frame, if you're new here, why do I say mid-December for 102K? Because in Elliott Wave analysis, pretty much the only thing we have as far as timing projections is in this situation where you get a pure wave 1 and a wave 2, which follows wave 1, and those two waves are symmetrical in time. So I should expect more or less 24 days down and 24 days back up with that counter correction. So given the start of this counter correction, we should reach it at around December 15th. Okay, so right now it's December 4th, approximately 11 days left. Now, yes, I'm putting December 15th. I'm not really trying to wiggle out of that, but do be like informed that plus or minus a few days is always expected, is commonplace. Furthermore, there's a new moon on December 19th. So, plus or minus a few days once we get up here, I expect to top in and around December 15th. So I'm still keeping that time frame, not just for Bitcoin, but I'm using it also for the rest of the cryptocurrency space because, as we know, Bitcoin sets these trends, all right? It sets the direction. If we're going up, Bitcoin's going up. If we're going down, Bitcoin's going down. It doesn't always tell you the intensity of the move, but it does give you the general direction of the crypto market. So that's what I'm still expecting. And I guess to further refine my read here, this ABC counter correction right now, in my estimation, is in its B wave. What's that mean? That means I think we put in 3 waves up right here. I think we need to finish this B wave, and it's going to look something like this. So don't be surprised if Bitcoin plays out here and then comes down to complete the B wave, and then the bigger move up to our final target. So do not be surprised or shocked if Bitcoin plays at this level at around 94K, then dumps to around 80,000 before coming back up again. Okay, I'm seeing that as a high likelihood on the charts. Okay, so that's Bitcoin. Now, keep that analysis in mind as we look at the altcoins. I started the episode by teasing that I believe, based off of what I'm seeing, that altcoins are extremely bullish right now. Why? Looking at this others chart, remember the others, basically all of the altcoins in the cryptocurrency space minus the top 10 in market cap. I think that's the best approximation as to what the altcoins are doing right now. I'm not going to get into why that is. High time frame analysis, quite simple. This is a flagpole. This is a descending wedge or a falling wedge, and it's very nice uniform falling wedge of about 40 days. And so if you add these two together, you get a bull flag. Okay, that is your flagpole, that is your pennant. And if you throw some Fibonacci retracement levels on here, you can see that this descending wedge, this pennant, came to between 0.5 and 618 of this flagpole. So it's a textbook bull flag, okay, which you would call it in pattern analysis, in Elliott wave analysis. We call this a zigzag. That's the measured move. That's the target up here, okay? It's essentially the height or the length of the flagpole superimposed from the side of breakout, right? That's the higher time frame analysis. Altcoins are bullish based off of that alone. Now we can get even more particular in that analysis by saying, just looking at the most recent price action, we see a very encouraging W bottom at the bottom of this 40-day falling wedge. Okay, these W bottoms typically usher in reversals of trend, right? So past 40 days, you can look and see that altcoins have been chopping sideways and down. And this right here, this move that began in the beginning of December, should continue up and through the falling wedge, the falling channel. Okay, so far so good. And what's really bullish about it is not just this W reversal, but the fact, the very simple fact, let's go on the hourly time frame now, that since this purported impulse began on December 2nd, right, you've been getting very credible up and to the right impulsive price action. Now, I'm going to explain this because this is huge. You can say there are two phases of price action in technical analysis. Two. First, you have corrective price action. Corrective price action is unpredictable, it's messy, it's unpredictable, it doesn't go anywhere, there's no determining, like there's no direction it needs to go. That's not the purpose of corrective price action. The purpose of corrective price action is to gather buyers or gather sellers for an impulsive move. So corrective price action does not have it in its goal to reach a level. Typically, there are certain instances where, yes, there are levels, like clear levels, like in a flat correction, you're hitting that minimum 786 Fibonacci retracement. In a zigzag, you're hitting that minimum 0.5 Fibonacci retracement. But generally speaking, you can think of corrective price action as having no particular stated goal up or down. It's perfectly happy, contented, going sideways for 10 years like you did in silver. Okay, that's corrective price action. This is the nature of corrective price action. That's one mode of price action. The second is impulsive price action. And in impulsive price action, you can further separate impulsive price action as corrective impulse or pure impulse. Corrective impulse is, for instance, what you saw here, right? So you went from, the 10th of November all the way up here, all the way down here. That's an impulse because it does have a goal in mind, this support level. And it's not necessarily going in a straight line. It is and it isn't, but it's a messy impulse, corrective impulse. So it's both corrective insofar as it's happy going side to side, but at the same time, it does have a goal. It does have a destination. Does that make sense? That's corrective impulse. Now, pure impulse is different than corrective impulse. Corrective impulse does get to its destination, but it's difficult to track and it's difficult to measure. It doesn't always follow conventions that you see in pure impulse. But in pure impulse, it's wave 1, 2, 3, 4, 5. Generally speaking, you can always have extended wave 1, extended wave 3, extended wave 5. You can have truncations of wave 1 and wave 3. You can have truncation of wave 5. You can have different variations, but generally speaking, it's more stretched out. It's more, okay, I got somewhere to be, and I'm going to get there in the most efficient way possible. It's a straight line drive to the goal, to the destination. That's pure impulse. That mode of price action is particularly rare. It's not something we see every day, and quite literally, we haven't seen it in the cryptocurrency space. I'm going to zoom out for a second. We haven't seen, let me delete this because that whole project is finished. We haven't seen pure impulse in the cryptocurrency space since April of 2021. That was the last time. Okay? April of 2021 was the last time we saw pure impulse. And you could say that this right here was pure impulse, where you reached a bottom, you completed a corrective pattern, and you were off to the races, and you pretty much had a stated goal, a stated target, and you got there as efficiently as possible. It's not a straight line, nothing is, but insofar as price action goes, you can see the character is different here. Okay? So that's what I'm saying we're likely beginning again. All right? And it's been a while, and specifically it's been in altcoins, as per this others chart, around 1700 days almost. Okay, so it's not something that you get every day, every year, every other year. It's rare. It's really rare. And this even, it may be even more rare in some assets, because not every asset is perfectly mirroring what you're seeing in this indicator, in this others chart. So yes, it's rare. It's very, very, very rare. So I want to say, what you're about to see, if I'm correct, is a mode of price action that most of you all that are now in crypto, in this space, may never have ever seen before or ever experienced, unless you were involved in certain projects in 2020, 2021. You probably have never experienced it. Okay? And one of the things about pure impulse, and I talked about it briefly, it goes where it needs to go in an efficient way, in a direct way, and it continually gives that push. Okay? Now, it's easy when you're doing analysis to qualify certain types of price action post facto. Oh yeah, that was this, that was that. Of course, it's easier this way. It's harder to do as it's happening. It's harder to do before it happens. But what we can do now is jump down into the small time frame. And the character of that mode of price action, let me say, you should be able to see it on the small time frame. Although part of what makes it pure impulse is it stands the test of time. But yes, on the small time frame, you should also be able to see it, because on the small time frame, it's not often that you see these few characteristics that I'm going to discuss. First, the bottom. Let's see. The bottom is decisive. It's not one of those bottoms that looks like this. Let me show you the difference. You see this bottom? It's very noisy. It's very busy. It's a lot of side to side. You see this bottom? It's a double bottom. We don't do double bottoms in pure impulse. Pure impulse is initiated with one single point, kind of like this. But it's tricky because look, you have a single good hammer candle into pure impulse, or what it seems to be a pure impulse, but it really isn't, because then you retrace. So again, it's not easy to identify. I think the best way to do it is going on the high time frame, finding an environment that's likely to yield that kind of price action. So you want to see macro bottoms. You want to see evidence of capitulative candles. You want to see evidence of completed corrective patterns or accumulations. But here, I think there is a decisive bottom. I'd say here it is on December 2nd, right there. Okay, the other thing you want to see, you don't want to see anything too crazy at the outset. You want to see slow, gradual, steady growth. There's a saying, if it's fast, it won't last. If it's slow, let it grow. So pure impulse never burns out in the beginning. It starts off slowly and it continues, and it typically goes for an extended period of time. It could go on for months and years. So what you're seeing here, let's just use this example again. Where's that? Oh, here. So in this example, you do have, the clean bottom with one bullish hammer candle, but what you don't have is the gradual retracements that makes it sustainable. You don't want to go too fast, and you don't want not to retrace, because you don't want to create within that impulse imbalance. You don't want to create imbalance. So here you can see you came out, it might start here actually, and you retraced right there. And then you went again up and you retraced. Those retracements are healthy. And so the retracements or the impulses are punctuated by common sense, reasonable, moderate retracements. The impulses are punctuated by intra-wave retracements every single time. Let's go on the hourly time frame. This is another way you can identify pure impulse. There's so many. I can talk about this forever, but I'm gonna cut myself off in just a bit. But it's so important, because once you're in this mode, you print. Once you're in this mode, The market is giving. Once you're in this mode, the market is very predictable and very lucrative. This is where everybody makes their money. You can make money in other market modes, market environments, but it's less likely. The probability that you make money in this market environment is much higher, and you go much further, much longer, all that stuff. So here you see, this is the first impulse, punctuated by a common sense, reasonable retracement. Second impulse, punctuated by common sense, reasonable retracement. And you should expect that to continue. And those common sense intra-wave retracements, those moderate, reasonable retracements, they have the function of creating an impulse that keeps going up, yet does not create too much imbalance so that the market has to correct. The market all the while is going in a determined direction, but all the while is giving market participants the opportunity to involve themselves in the trade. The market's being fair. Okay? It's a steady, sustainable growth that you're seeing. This, to me, is one of the few times I know you can see this. You can see things like this in the market, but really close, careful analysis will inevitably yield a conclusion that this price action that we've seen since December 2nd is markedly different. It's qualitatively different. And this, in my estimation, is pure impulse. Although we have yet to see the big burst that's associated with pure impulse, right? That people typically associate with. So big gains and stuff like that. Again, you want to be able to identify these things on the small time frames, get involved, and then watch it progress and mature on the higher time frames. Okay, this is what I'm seeing in the market. So I think this is extremely bullish, although we have yet to get big gains from this. All right, now let's look at the Bitcoin dominance chart, because when you talk about big gains, you're going to get it when this is going to show you the big gains, and this is going to show you when the big gains are likely to come, because this is going to be on the point of breaking down. So the high time frame analysis for this Bitcoin dominance chart is still very compelling in so far as it supports the bullish thesis, because we have this strong corrective impulse. Now you know what that is. Corrective impulse that had Bitcoin dominance coming down quite strongly. Is this even a corrective impulse? It's an impulse. Let's just keep it at that. It's an impulse that we've seen since November 4th. And since then, you have this counter correction that's given you 1, 2, 3. Is it a time symmetrical kind of affair that you're getting here? I don't know. Let's see. 13 days, 16 hours. Here you get 14 days. Maybe you're looking at pure impulse, because I just looked at 13 days, 16 hours, and 14 days. I'm on the 4-hourly time frame. So more or less, this impulse from November 4th and this correction are satisfying. They're satisfying time components of, being aligned, right? They lasted around the same time. The issue now is, if that were typically a wave 2, you would want to see a retracement of at least 0.5 to 618 typically, but technically speaking, wave 2 comes to a minimum of 0.382. So technically, this is still a valid candidate for a wave 1 pure impulse, wave 2 pure impulsive retracement. Okay? That being said, it's not important actually if it's pure or it's not pure. what's important is that you notice that there's some sort of impulse, corrective or pure, and here you have some sort of retracement. So this move is a reaction or retracement of this. That's very important. That's basically the analysis. If you know that this is your principal move and this is your counter move, then you know that you're going to continue in the direction of the principal move. That's it. That's the analysis. So when you look, you can see, oh, we seem to have had, let's go on the hourly time frame now, some sort, oh, whoops. We seem to have had some sort of reaction, some sort of rejection at this point yesterday, right? That's important because once you came up here in Bitcoin dominance, you experienced some resistance and you broke down, and now what you're getting again, it looks like an impulse and a counter. That may very well continue. If that continues, that's where you get your big move. That's exactly telling you you're getting your big move in the others chart. Altcoins beating out Bitcoin, giving us those initial big moves that we're waiting for. So it's very encouraging when I see the others chart, when I see Bitcoin dominance chart, and when I look at my higher time frame Bitcoin analysis and what it's doing, everything's sort of aligning to support that trade thesis that altcoins are preparing to move off of the line. And if that's true, what should we expect in terms of gains in the immediate short term? That's the last thing I'll answer. So if altcoins are to move from here and break out, I'm expecting quite simply a breakout of this W pattern, which should give you a measured move up here around 247 billion. Okay, and in terms of a percent gain on this others chart, that's approximately a 14% move. Now, if it's a 14% move on the others chart, that means maybe some assets are going to give you 30% out of the gate. Others may give you 15%. Some may give you a little more than 30% even. But you should see on this others chart a move up here, and a retest of the top of this 40-day channel, right? This 40-day falling wedge has to be retested. The top has to be retested, okay? And actually the midline has to be retested. So, hold up. I'm doing this on the fly with you right now. Let's see. The midline has to be retested, and I don't think it has yet. So let's figure that out first. Let's see. Okay, if we are to start our impulse down here and consider that as the orthodox low. Okay, I would say, let me revise what I just said. I would say my next target is quite simply 227 billion. Reason being, I don't have a midline retest and I need a midline retest, and that is not negotiable. I'm not leaving this channel without a midline retest, so I need one move here, and I'm probably going to see a retracement like this to the midline before moving up and out. So on this others chart, it should look like just a modest gain of about 5-6%, but that may translate into a 20% move in some altcoins, or maybe just a 10% move just at the onset, okay? Because we're looking at a likely retest of the midline of this channel before continuing up and out. And yeah, that's what I'm saying. All right, and this has to happen in the immediate short term, because remember, we only have until around the 15th for Bitcoin to reach its target. So altcoins have to move much further than this. So all this little stuff on the small time frame has to happen in the immediate short term for the other bigger gains to come in the coming week and a half that we have left. All right, guys, that's it for me. Hope this was helpful, useful. Like, share, and subscribe. If you got value, consider joining my crypto portfolio mentorship and consultation service, where I trade one-on-one with you. I help you build a portfolio of up to 5 assets that are likely to yield sustained gains in pure impulse for this bull market, this alt season. And I also help you with risk management and with identifying high probability levels of resistance and support to snowball profits, which is extremely important. You can turn a very small portfolio into a very large portfolio before the big breakouts happen. So that's crypto portfolio mentorship and consultation. The details or instructions for how to sign up are in the pinned comment below. Last but not least, if you're just interested on my take on a single asset, it could be a crypto asset, it could be a non-crypto or traditional asset, it could be an indicator, it doesn't matter. You can make the payment, email me, and then within 24 hours you should have that pre-recorded analysis. And after you get that, I'm fine with fielding a couple follow-up questions if you have any. All right, guys, that's it. Take care. Bye.
My prevalent time slot, I vocalize too deep to localize, even when I'm right on the surface. You act surprised how I work this, but I can't lie. Many a good alibi. I'll catch you later. Visions are vividly enhanced with emphasis and amethyst to develop morale advantages which help us manifest magnanimous. We body vitals like evangelists. So listen when you're dealing with people who be revealing premonitions with precision. At least that's what I'm aiming at for now. I speak the language of the world, meandering throughout the crowd. Used to feel safe to say anything, but now it's a risk. It's hard for me to let go when all I can do is reminisce. Gone like the wind, here's where I begin. Should I smile or should I grin what's happening? Gone like the wind.